Hi, I'm Sandy Botkin, CPA, attorney, and former trainer of IRS attorneys nationwide. And I'm author of the book, Achieve Financial Freedom Big Time. We talked about in another video the use of a self-insured medical reimbursement plan to cover you for expenses that are not covered by insurance and to deduct your medical expenses as a business expense. The problem with the self-insured medical reimbursement plan is two problems. First of all, it doesn't work well for an S corporation. It's very limited. And the second problem is that it's all based on reasonable wages, and what you pay your family plus what you give under the self-insured plan has to be reasonable for the amount of hours they put in. So Congress set up another item which will allow you to basically deduct all of the things that aren't covered by insurance, and it's called a health savings account. Now, what is a health savings account, otherwise known as an HSA? A health savings account is where you take a certain amount of money each year and you put it away into like a little bank account. It's fully deductible when the money goes in this account. When the money comes out to cover things that aren't covered by insurance, such as deductibles, eyeglasses, co-insurance, dental, braces, that money is tax-free. And it's one of the few things in life that you get a full deduction for that you actually can be using tax-free. Now, the way the health savings account is that you put the money in and you get a full deduction for it. You are limited as to how much you can put away. If you're single, the limit is roughly $3,150 a year. If you're married, you can put away up to $6,250 a year. There's also a carryover for whatever you don't use, you can use in future years. You don't lose it if you don't use it. So you can carry it over. Now, with the HSA, you can't have another non-qualified plan, which means you can't have an HSA with, say, if you have AFLAC for injury or sickness. You can't use the HSA if you have a flexible spending account to cover the same expenses. You can't use the HSA for a self-insured plan unless the self-insured plan and the flexible spending account has exactly the same deductible as the HSA. If they have the same deductible, then you can use both. That's the key. By knowing about the HSA, by knowing about the self-insured medical plan, which can be used together as long as you have the same deductible, you can make your life a lot less taxing.